Hello and welcome to TalentSprint. In this video, we will analyze the International Monetary Fund. In the previous video, I had explained to you how the International Monetary Fund and the World Bank were born out of a conference held in Bretton Woods, New Hampshire, United States in the year 1944. And the International Monetary Fund was established in the year 1944. The headquarters is Washington, D.C. in the United States. Washington, D.C., as you all know, is the capital of the United States of America. And here is headquartered the International Monetary Fund, or the IMF as it is popularly known. Although it was formed in 1944, the IMF formally came into being in the year December 1945 and originally started with just 44 countries as its members, but currently has 189 countries as its members. The IMF today has 189 countries as its members, countries from all over the world. India too is a member of the IMF. These 189 countries were divided into 24 constituencies or 24 groups because it was difficult to administer all the 189 countries individually. What the IMF did was to divide them into 24 different groups based on the geographical proximity, and that's why these 24 constituencies, as they are known, or 24 groups, were formed by the International Monetary Fund. Each country, each of the 189 countries has one vote in the International Monetary Fund. Let us understand that the International Monetary Fund is an international body of various countries that have come together to ensure economic prosperity for all nations. So to that extent, all decisions taken at the International Monetary Fund are democratically taken, and a vote is taken to decide whether the countries that are members of the International Monetary Fund are in agreement with the decisions or not. So once they are in agreement or not, that will be known only by voting. To that extent, each country in the International Monetary Fund has one vote in the IMF. There are approximately 2,700 staff working at the IMF headquarters in Washington, D.C., and these staff are drawn from 148 member countries. The total quotas, or what is the quota here, is that the quota is the amount of loan that can be given by the IMF at any point in time. So the total quota is about $668 billion as of the 13th of September 2016. $668 billion is a huge amount of money, as you can very well understand, and this was the quota decided by IMF as of the 13th of September 2016. And the biggest borrowers from the International Monetary Fund, the amounts outstanding as on 31st August 2016 are Portugal, Greece, Ukraine and Pakistan. Portugal, Greece, Ukraine and Pakistan are the biggest borrowers from the International Monetary Fund. And the biggest precautionary loans, amount agreed to as of 9th of August 2016, are given to Mexico, Poland, Colombia and Morocco. A very quick glance at these nations, Portugal, Greece, Ukraine, Pakistan, Mexico, Poland, Colombia and Morocco, will reveal that none of these are considered developed nations. So the focus is clearly on the underdeveloped nations. The focus is clearly on uplifting their economic status. The focus is clearly on helping them with the necessary monetary assistance that will go a long way to uplifting their general status in the world scenario. Most resources of the International Monetary Fund are provided by member countries primarily through their payment of quotas. The money for the International Monetary Fund comes from the member countries themselves. So each country contributes to the quotas of the International Monetary Fund, and that money received from the countries is then allocated to the various countries depending on various factors, especially the need for money. So that is how the International Monetary Fund that's how the International Monetary Fund actually functions. It's a kind of a cooperative movement where each country contributes its own resources to the International Monetary Fund, and each country has got a vote in the IMF. So the entire thing is done in a democratic way so that each country can have a feeling that it is not left out when it comes to the matters of the International Monetary Fund. IMF remains one of the world's largest holders of gold. Right from the early stages of gold standard till now, the International Monetary Fund holds the world's largest amount of gold, or one of the world's largest amount of gold, because gold is still considered the most precious metal and is considered the safest haven in times of trouble. So it is no surprise that International Monetary Fund has a large amount of gold reserves so that it can use them at times of necessity. What is the original aim of International Monetary Fund? When it was started in December 1945, the original aim of International Monetary Fund was to promote international monetary cooperation. That's the most important thing. It was to promote international monetary cooperation, which means that the International Monetary Fund wanted cooperation amongst the various member countries in the areas of monetary systems, in the areas of money, as you may say. So the original aim was to promote international monetary cooperation. Also, to facilitate the expansion and balanced growth of international trade. It is not enough that if one or two countries continue to prosper at the expense of the other countries. So the IMF wanted to promote and foster international growth and a balanced growth. That is what is important. The expansion and balanced growth of international trade. It wanted to ensure that the international trade expands and of course it grows, but in a balanced manner so that every country can be benefited to it as much as possible. And of course promote exchange stability. There was a lot of instability in the exchange rates of the various currencies. So the aim of International Monetary Fund, one of the original aims when it was started, was to promote exchange stability. And also to assist in the establishment of a multilateral system of payments. Multilateral system of payments means one country paying to another country through a third country. That is called multilateral. Otherwise, between one country and another is called bilateral. So multilateral is one country to another country through a third country, through a third medium of payment. So for example, if India were to pay money to, let us say, Singapore, for example, the Singapore's currency is the Singapore dollars. Instead of paying money in Singapore dollars, India will pay money to Singapore in the form of US dollars. That is called the multilateral system of payment. And of course, make resources available to the members experiencing balance of payments difficulties. We need to understand here what is balance of payment. What is balance of payment? So the aim of IMF was to make resources available to members experiencing balance of payment difficulties. What is balance of payment? Balance of payment is nothing but the difference between the amount owed and the amount receivable. In other words, let me give you an example. India exports a lot of software for which it has to receive money. And at the same time, India imports a lot of oil for which it has to pay money. The difference between the amount receivable for the export of software and the amount payable for the import of oil is called the balance of payment. In many cases, the balance of payments could be negative, which means that the country could be owing more money than it is to get. But in some cases, the balance of payment could also be positive. That means the money which it should get could be more than the money which it needs to pay. So India has been a traditional importer of oil and it continues till today. However, in the recent years, the balance of payment is getting slightly shifted in India's favor because of the huge amount of exports of software. But still, it is not enough to cover the import of oil, the import bills of oil. So the balance of payment position of India continues to be negative because of the huge imports of oil. But let me tell you one thing, software and oil are not the only two commodities which are involved in international trade. India exports leather, India exports so many agricultural items. At the same time, India imports a lot of goods from the various countries, from USA, from China, from Britain, from Germany. All these countries send their goods and services to India. So it's very difficult to estimate at any different points of time which are the exact items which are involved in international trade, because it could so happen that with the evolution of time and the passage of time and the improvement in technology, a lot of things could be bought and sold between India and the various countries. So it's very well nigh impossible to predict exactly which are the commodities involved in import and export. But however, in order to understand balance of payments better, we need to understand that the balance of payments means the difference between the amount that the money has to pay to other countries and the amount that it has to receive from other countries. And original aim of IMF was to ensure that it will make resources to countries experiencing balance of payment difficulties. Wherever the countries are experiencing balance of payment difficulties, the International Monetary Fund will come and help them with a lending hand. That was the idea of this statement, that IMF will lend a lending hand in terms of the countries to which the balance of payment difficulties are there. Now, the Indian constituency in the IMF, we saw a few minutes ago how the 189 countries were divided into 24 constituencies of geographical proximity to each other. And the Indian constituency consists of 5 nations: India, Bangladesh, Bhutan, 4 nations, not 5. The India constituency consists of India, Bangladesh, Bhutan and Sri Lanka. These are the 4 nations which are there in the Indian constituency. The group is represented by Mr. Subir Gokarn, former RBI Deputy Governor, as his representative, and he is there in the IMF as the Executive Director. From India, the Finance Minister is the ex officio Governor at the IMF, while the RBI Governor is the alternate Governor. The IMF has a board of governors drawn from different countries, different major countries. India has a place in the governors list in the IMF, and from India, the Finance Minister is the ex officio Governor of IMF from India. What is ex officio means? It is not dependent on the person, it is dependent on the office. Whoever holds the Finance Minister's portfolio will be the ex officio Governor at the RBI, at the IMF. Now today, Mr. Arun Jaitley is the Finance Minister for India, and so he is the Governor of IMF as far as India is concerned. And the alternate Governor is the Reserve Bank of India Governor. The current RBI Governor, as we know, is Mr. Urjit Patel. The current MD of the IMF is Ms. Christine Lagarde. Ms. Christine Lagarde is the current MD of IMF. And talking of Ms. Christine Lagarde, today's news says that Ms. Christine Lagarde is highly impressed with India's reform system, and she has said that the demonetization of the currency in November 2016 was indeed a very bold move by India, and that is going to serve India very well in the coming months. And she has also praised India for the lot of other reforms which have been taken, and she says that they have come at the right time, which augurs well for the country. So I think we must thank Ms. Christine Lagarde for the statements regarding the Indian economic reforms. So this is what is the genesis of IMF, the way it operates, how many member countries are there, what are the various constituencies representing the various member countries in the IMF, how India is having its own constituency consisting of India, Bangladesh, Bhutan and Sri Lanka, and how the ex officio finance minister is the governor of IMF representing India, and the RBI governor is the alternate governor at the IMF, and what is the original aim of IMF: to promote equality among nations, to promote exchange stability, to promote countries which have to facilitate and mobilize resources for the countries which have balance of payments difficulties. We also understood how each member country has one vote in the IMF, and how each member country contributes to the quotas in the IMF, and thus the IMF is dependent on its member countries for its monetary financial situation. We also understood how the biggest borrowers from the IMF are, who the biggest borrowers from the IMF are, and who are the biggest borrowers which have been promised assistance. And we also saw that the list of such nations, which includes Pakistan, Morocco, Colombia, Mexico, Ukraine, they all are underdeveloped nations. To that extent, the IMF is there to help the underdeveloped nations, and of course the developing nations also do get assistance from IMF. It's not that the International Monetary Fund is only for the underdeveloped nations. The developed nations also get money from the IMF. So we have understood the entire gamut of IMF. Of course, the IMF, as I told you, has approximately 2,700 staff from 148 nations. So it's truly and very importantly, it's a truly international organization drawn from the member countries. There are 189 member countries in IMF, and it's no surprise that the IMF stands for equality amongst nations. The International Monetary Fund, as we saw, was born in December 1945 out of the Bretton Woods Conference held in the United States, and ever since then the IMF has been rendering yeoman service to the cause of world economy by trying to ensure that there is an equitable and balanced growth of international trade. That's very important, equitable and balanced growth of international trade. So this is what I have for you regarding the International Monetary Fund. I hope you enjoyed watching it, and until I see you in the next video, it's bye from me for now, and I thank you for watching this video. Hello everybody, and welcome again to TalentSprint for a video presentation on one of the world's premier economic organizations, and namely that is the World Trade Organization, or WTO. The WTO is the only global international organization dealing with the rules of trade between nations. Let's understand, this is an international organization dealing with the rules of trade between nations. That is why it's called the World Trade Organization. WTO agreements are negotiated and signed by bulk of the world's member countries' nations and ratified in their parliaments. The trading nations of the world, almost every country engages in some kind of trade or the other now. So the trading countries of the world come to a negotiating table, agree on certain set of rules and regulations, and sign on these set of rules and regulations and get them ratified by their respective parliaments. That is how the World Trade Organization works. The goal is to ensure that trade flows smoothly, predictably and freely as possible. The aim of WTO, or the goal of WTO, is to ensure that trade flows as smoothly, as predictably and as freely as possible amongst the various countries. The WTO, or the World Trade Organization, is headquartered in Geneva in Switzerland. The ministers of the World Trade Organization meet once in 2 years. The ministers deputed by the respective member countries meet once in 2 years. While the General Council is the top day-to-day decision-making body, and it meets a number of times in a year in Geneva. The General Council of the World Trade Organization is the day-to-day body that runs the day-to-day affairs of the WTO, and the members of the General Council meet a number of times in Geneva, while the ministers of the WTO meet once in 2 years. It has over 160 countries and was formed in the year 1945. The World Trade Organization has over 160 countries, and this was formed in the year 1945. The aim of WTO is to ensure that trade flows as freely, as predictably and as smoothly as possible between the member nations. And as I told you, the WTO is headquartered in Geneva in Switzerland. It's got a General Council which manages the day-to-day affairs of the WTO, and it has got a ministerial council which meets once in 2 years and discusses the various problems and various issues connecting the member countries. It has got over 160 members, and it was formed in the year 1945, just as the time as the IMF was formed. WTO is a very important organization, and they ensure that the trade between nations proceeds smoothly. The way the WTO functions is that the group of nations meet together, sit down across the table, negotiate and discuss and arrive at certain rules of trade and sign an agreement that these shall be the rules of trade between the member nations. And once this agreement is signed, these agreements are then ratified by the respective countries' parliaments. So this is about World Trade Organization. I just gave you a brief rundown on WTO, and it's one of the most important economic organizations in the world. So until I see you in the next video, it's bye from me for now. I hope you have enjoyed watching this video. Keep continuing to watch Talent Sprint. Thanks and bye for now.